Hello and welcome to Charting the Markets with me, Sean Murison, Senior Market Analyst at IG South Africa. Today's economic calendar is quite light. Markets are still assessing tops after yesterday's gains led by US tech, and that's after Nvidia results. We have had German IFO business climate data, as well as final GDP data that's out of Germany, both in line with expectations. That final GDP print showing a 0.3% quarter-on-quarter contraction. We do also have Eurogroup meetings, which are ongoing on the second day today. Let's look at some charts, starting off with the US dollar basket, or the US dollar index. Now, yesterday when we were talking about this, we were saying, well, we're watching that candle, which looked like it was being rejected off the lows, prices being rejected off the lows, and strength had been coming back into that US dollar. And said if we could get a close closer to the top, the high of that session rather than the low of that session, we'd say that, well, we're in a bit of a flag formation, which is actually a bullish chart pattern. So as a function of this recent move up, we've had that downward consolidation. It's a flag highlighted in blue there. That's suggested of a continuation of that preceding trend, which that preceding trend was up. So for confirmation, you'd look for an upside breakout. So you want to see the price just closing above that resistance of that channel, that flag, in which case we start targeting and move back towards that 104.70 mark. In that situation, maybe looking at a stop loss, probably that 103.40 mark on the US dollar index. Now, as you can imagine, if you're looking at the euro dollar, you're going to see a bit of the inverse of what you've seen with the dollar basket. And that is we've had a downtrend, and then we've had this counter trend move up. That has formed also which looks like a bear flag. So this, as a function of that preceding trend down, suggests that we could see some more downside to follow. And that obviously would correlate with euro weakness and dollar strength. But we wait for the breakout. So we want to see it close below that channel support before we commit to that. In that situation, we'd be targeting back down towards that 1.0755 mark. Now, this is a bit of an ambiguous picture. You could argue that the longer-term trend is sideways, even if the short-term looks like we could go a little bit lower. So if you are preferring to be a bull, then maybe waiting for that weakness to play out. If it does play out, and picking it up somewhere closer towards that 1.0755 mark, or possibly even a little bit lower at that 1.0696 mark. And of course, we don't catch falling swords. We want to see the price moving towards those levels. And if you're looking for long, just waiting for that price to tick back up and just show that it's stopped falling and it is changing direction. So we're looking for a bullish reversal pattern if we get this downside breakout. If you're looking for long, if you're looking for short, you're looking for a close below this this shaded area, this bearish flag formation. Where you put your stop loss, now this might be a little bit far above that 1.0894, although it is a key resistance point, and it's just been proved relevant yesterday. So maybe having it a little bit tighter, maybe about that 1.085 mark might be a consideration if you are trading the euro dollar and looking to short. Looking at cable, pound sterling versus the US dollar. Now, when we looked at this last, we said, okay, we'd had a downside breakout from a previous consolidation. But what's turned out to happen is it looks like it's just extended the size of that consolidation rather than being a meaningful new trend downwards. So we adjusted our range here. It's a broad range sitting between 1.2595 and the resistance of that range at 1.2800. Now, we are slap bang in the middle of that, and it does seem to be a level of resistance. Now, if you can look at trading between the, you want to see a strong mark and before you start targeting and move to 1.2800. You could even be a little bit more conservative, maybe looking for a target there, something about 1.2750. For the bears, you want to see this resistance hold up. You want to see this candle turn red. You want to see this candle, close at least below the halfway mark of this preceding green candle, which suggests maybe some renewed downside on cable. So pound weakness, dollar strength, in which case we start targeting move towards this lower level of support, 1.2595. But if you were looking to be a little bit more conservative on that target, you could start looking at maybe 1.278 odd on that. Let's move over to some indices now. And starting off with the US Tech 100 or the NASDAQ 100. So the reversal we were talking about yesterday, that trend line support worked out quite nicely. We saw a very sharp move yesterday, and we have now traded about a few points short, about 10 points short of that initial high target. 050. We're not yet in overbought territory. Today's candle is looking a little bit red, but it is a day that is light in news. So I'll be interested to see how much actual price action we do see today. If you were long, you might consider exiting your trade, banking in that short-term profit. If you're looking for new longs, you want to see a close above that high resistance at 18,050 mark. Then we could start targeting and move up to about that 18,400. Alternatively, if you don't like to buy into strength and looking to find weakness, we'd hope to see a bit of a pullback here, back towards at least that 17,600 mark, and see a pullback in just with a bullish price reversal. Now, because that longer term trend is up, we're not looking at picking tops and looking at shorting. Even if we did expect a bit of a pullback, we'd rather wait that weakness out and look to pick it up. So we're not in the habit of picking tops or trading against underlying trends. And this long term trend has been brutal for those that have been trying to trade against it. Moving over to Europe. Euro Stoxx 50, another trend that is firmly intact. Market trading to new highs. A lot of stocks on the that French 40 and that Germany 40 helping drive this index higher. We are sitting in overbought territory right now, so I think if you have been long, might start considering exiting your trades and locking in some profits, and hoping to join that trend if we get a bit of a pullback, with that initial support being about that 4,760. Again, if that price does pull back, we want to see the price just finding support, and how we assess that it's found support is the price just as it falls, and then it just starts to tick back. That would be a bullish candle pattern, something like a bullish engulfing, bullish harami, piercing line, anything like that. We don't assume the levels until we find that support, so we could even pull back quite some way, but we're certainly not, again, looking to pick tops and trying to short the tops, because that trend is firmly in place, that uptrend is firmly in place. There is a longer term upside target here, which is channel resistance, and we're assuming that it's somewhere around about 4,970. Right, moving over to the UK, look at FTSE 100. So the picture is largely unchanged from what we looked at in our previously, but it is still relevant, and I think there is still a bit of an opportunity. We do have a bearish, we have a different environment here. We have a range-bound trading environment, so we're looking at longs or shorts depending on where we are. At this point in time, we do have a bearish price reversal off resistance that is still relevant. It's still in place. Yes, today was a positive day, but we are starting to resume a bit of downside now. So that bearish reversal, and it's also accompanied by an overbought signal to add a little bit more validity to that signal. We can start targeting, move down to, if we're being very conservative, probably about 7,620 odd. There's a few levels in between that, but that lower level there, I think this new low would be a consideration as well, 7,485 odd. If you're looking at going short on this type of move, might consider having a stop loss on a close above that high, that's 7,745 mark, while targeting these lower levels. And if we do start getting a move and we start hitting those lower targets, we could always just tighten that stop. So move that stop closer to just try lock in profit, if we are afforded that opportunity. Looking at some commodities. When we look at gold, we still assume a longer-term range-bound price environment for gold. But if we look at this little downtrend that we've had this counter-trend move here, which is also taken a bit of a bear flag type formation. Now, this is obviously inversely correlated to what we're seeing on the dollar. And it does seem a little bit ahead there, because we do have a downside breakout. Today's candle is not complete, so if this candle was to actually, find some strength and we close back into that channel there, then the breakout would be obsolete. But we were looking for a close as it would stand right now, maybe even a little bit lower, before we start targeting a retest of that low down $1,990 per ounce. And in that situation, if we do get that, we can look at having a stop loss maybe above this reversal high here, sitting about $2,035 per ounce. That's on gold. Now, copper, a leading indicator of economic health, perhaps China's economic health. It's been a bit range bound over the last little bit. and we've seen a bit of a bearish price reversal in the short term. So if you're not trading copper, a lot of the underlying miners, the likes of Glencore's, the BHPs out there, obviously this is important relative to earnings for these miners. We have a bullish sash type formation, which just circled black here, the more recent circle, and it is accompanied by an overbought signal. And we've seen previous reversals like that have worked relatively well over the last few months. And so suggestion is, and today is not complete, but doesn't seem likely, never impossible, but doesn't seem likely that we'd see this candle moving into the green territory. But if it stays like it is, then we start targeting a move towards $8,410 per metric ton. And if we were looking at shorting that, we could have a stop. We'll look at a stop on that reversal high at about $8,610 per metric ton. Also very relevant to China and very relevant to earnings for a lot of the miners is iron ore. Now, iron ore, that longer term trend has been up and it has started to break down. You could argue that this is a bit of a head and shoulders type formation that we're seeing in iron ore, maybe with a compounded left shoulder. Not as neat, but whatever it is, there's a range. It's broken support. It's consolidated for a little bit and just circled black there. We have another bearish engulfing type pattern now. That's usually seen as a reversal signal. In this context, it might be considered a continuation pattern. And so that would suggest a little bit more downside towards $850 per ton now. If because we still do assume that longer term trend to be up, might not be looking at shorting that or the associated miners, but we're just waiting for that weakness to play out, recognizing that it can happen, and then looking to see if the support does hold and get a bit of a bullish reversal. That might be a positive signal. Alternatively, we do start breaking below that, then I would suggest, well, maybe that longer term uptrend is broken for iron ore, and then we'd have to reconsider our trade biases there. All right, that's all the charts from me. Thanks for watching. I'm Sean Murison, a senior market analyst at IG South Africa.